Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this particular video, we are going to be looking at an advanced trading strategy that combines two powerful indicators, which are the ADX. I'm just going to be adding the ADX to the chart right away. Here we go. And the Parabolic SAR. Okay, so this strategy combines both the ADX and the Parabolic SAR. Okay, so here we go. All right, now when you use these two indicators together, you can be able to identify strong trends and optimal entry and exit points, which can be a game changer in your trading strategy. So whether you are new to trading or looking to refine your approach, understanding the ADX and the parabolic SAR, or parabolic stop and reverse, SAR short for stop and reverse. Okay, when you understand these two indicators, it can help you to make smarter, more confident decisions in the Forex market. So stick around to learn how this powerful combo works and how you can apply it to your trading. If you find value in this video, don't forget to hit the like button and subscribe for more trading tips and strategies. Now let us start by understanding the ADX, okay, which stands for Average Directional Index. The ADX is a technical indicator developed to measure the strength of a trend, not its direction. Now, the ADX gives you a numerical value that ranges, within 0 and 78 based on the value in this default. Okay, but in some cases you might actually see, another value here, right? However, the main focus is around here. Okay, this is the main focus. All right, so generally when you have the ADX reading above 25, it shows that there is a strong trend. Okay, when you even have it above 30, it's even giving more momentum to that trend. Okay, as the ADX value climbs, it indicates an even stronger trend. Okay, however, it's crucial to remember that the ADX does not tell you whether a trend is bullish or bearish. It only tells you the strength of the trend. Okay, now the ADX is often used alongside two directional indicators. Okay, the two directional indicators are these two dotted, broken lines. This we have the plus DI, which is this orange color, and the minus DI. You can actually change the colors, to suit your own style. The minus DI, which is this purple color. So the ADX, is a combination of all these. All right. When the plus DI is above the minus DI, it suggests a bullish trend. Okay. All right, and when the minus DI is above the plus DI, it's just a bearish trend. Now, traders use this information to access not only whether a trend is present, but also the trend's potential strength. Okay, now let us talk about the parabolic SAR. Okay, SAR stands for stop and reverse, which already gives us a clue about its function. Now, the parabolic SAR is an indicator that highlights potential reversal points. As we can see on this chart, anytime you have the parabolic SAR above the candlesticks, it shows that it is a bearish trend. And when you have the parabolic SAR below the candlesticks, it shows that it is a bullish trend. Okay? The parabolic SAR highlights potential reversal points. All right? And you often see it displayed as dots, as we can see, above or below the price action on a chart. If the dots are below the price, it shows that the market is trending upward, especially when you notice that the prominent direction of the parabolic SAR, or the prominent position, is in the downward, portion of the candlesticks. It shows that it's actually a bullish trend. Then any situation where you find the parabolic SAR appear above is just a pullback. So in this example now, we can see that the parabolic SAR was mostly beneath the candlesticks. It shows that it's a bullish trend. So in situations where we have the parabolic SAR appear above, it's just indication of pullbacks. As we can see, when it appeared here, we had a pullback, right? Here again, we had a pullback. Here again, we had a pullback, which eventually now turned into a reversal, right? And then we can see that the parabolic SR was now mostly on top. And then when it appeared below, it became a pullback. Anytime it appeared below was just a pullback and a pullback and a pullback like that. But the trend was now a bearish trend, okay? Now, the main idea behind the parabolic SAR is to provide an easy to read visual guide on potential entry and exit points. Okay, so when the dots flip from one side of the price to the other, it often signals a possible reversal. Okay, so if you are riding a trend with the dots below the price and the dots suddenly flip to the upside, it shows that a possible reversal is about to begin. It could be a pullback, just like in this case, it could be a pullback, but when you notice that the dots begin to extend, right? When you start seeing that the dots are now many, it shows that a reversal has happened, okay? And moreover, it's important to also use trend lines, okay, so that you can get a structure. When you have a break of structure, you're going to notice that. Remember, in a bullish structure, we have higher highs and higher lows. So when you notice that the parabolic SAR is becoming lengthy, right, you must have already noticed a break of structure, because in this case, we are now having a lower high and a lower low. All right, so this now shows that a bearish trend has begun. Okay, but you have to be watching out for the parabolic SAR when it flips from one side to the other. So on the other hand, if you are in a bearish trend before and you notice that the parabolic SAR dots suddenly flip to the to the downside, because if you're in a bearish trend, it means that it's going to be on the upside, and it suddenly flips to the downside and it becomes lengthy, right? And then maybe you might even find some candlestick patterns, or chart patterns that can even confirm the reversal. Okay, that's the reason why it's important to also look out for patterns on your charts and possibly add other indicators, any other indicator of your choice. It could be moving averages, it could be RSI, it could be any other indicator of your choice, just to get extra confirmation, okay, when you have a possible reversal. Okay, so basically that is how this strategy works. The combination of the parabolic SAR and the ADX. All right, now before we round up, it's important to note that risk management is paramount. Okay, it is one thing to know how to analyze the chart, it is one thing to know when to buy and when to sell, it is one thing to know when to exit a trade and when to enter a trade. And it's another thing, very, very importantly, to know how to manage your risk. Because you might be very good in technical analysis, but if you have poor risk management, you might be a very losing trader. Okay, so it is important that you learn how to manage your risk. Make sure you do not lose, you do not risk more than you can afford to lose. Okay, make sure you stick to maximum, sorry. Make sure you stick to maximum of 2% of your capital per trade. When you are about to trade, make sure you don't risk more than 2% of your account balance in one trade. It's very important to put such considerations, all right? And then make sure you observe good risk to reward ratio. If you are risking $1, your profit target should be a minimum of $2. So it's a very easy thing to do, okay? Just make sure you observe good risk, because profit is not guaranteed. No matter the strategy you are using, profit is not guaranteed. No strategy is foolproof. Losses are part of the game. So you will want to help yourself by making sure that the period of time that you encounter losses, the losses will be small. Okay, so have that in mind. All right, so basically that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Until next time, stay profitable and stay safe. All right, cheers and happy trading.